Today's news, organized by topic and written as a short, listener-friendly script. Topic 1. Treasury Secretary Bessent's Bond Buyback Program. Treasury Secretary Scott Bessent surprised markets by boosting long-term Treasury buybacks from $2 billion per operation to at least $4 billion, saying the program could be larger with the aim of lowering long-term yields, especially on the 30-year, while offsetting purchases with short-term issuance. Yields fell briefly after the announcement, but largely retraced and are now steady. Many market participants view the effect as short-lived given the roughly $40 trillion size of U.S. debt versus only billions in buybacks. The move has intensified debate over Federal Reserve independence and Treasury Fed roles, with internal Fed disagreements and a pending task force report. Analysts warn the intervention may merely push problems forward. Hedge funds logged historic underperformance versus the S&P in July, and commentators note a disconnect between lofty stock prices and economic reality, even as Bitcoin posted a strong weekly gain. Topic 2. Geopolitics, energy, and Hormuz shipping. The U.S.-Iran conflict that began in early 2026 has sharply disrupted traffic through the Strait of Hormuz and destabilized Middle East energy supplies, sending Brent and WTI higher and driving diesel margins to record levels, which in turn heightens inflation and financial market volatility. The U.S. has escalated economic pressure. President Trump has described an economic war, and Treasury and state have warned of and imposed tougher sanctions, while military escorts have helped safe passage for many vessels. U.S. Central Command says U.S. support has assisted roughly 1,300 ships and enabled the movement of over 660 million barrels since May, though passage volumes remain well below pre-war daily flows and estimates vary by source. Policymakers debate effectiveness. Sanctions and escorting have eased some supply blockage, but the durability of those measures and the timing of supply normalization remain uncertain, leaving oil prices, inflation, and interest rate pressure elevated. Topic 3. Walmart's tariff refunds and bond market skepticism. Walmart received about $2.9 billion in U.S. tariff refunds and used part of that to roll back prices, promoting summer items and cushioning consumers. But same-store sales rose just 2.6%, a multi-year low, and the stock fell about 9% after results, knocking Walmart out of the $1 trillion market cap club. The sales weakness reflects factors including Medicare-driven drug price declines and higher fuel costs, over $2 billion this year, even as e-commerce sales surged roughly 24% for the quarter and Walmart raised its annual guidance. Meanwhile, Treasury's long bond buyback briefly nudged yields down, but 10-year yields sit near 4.7% and 30-year near 5.25%. Market commentary frames the intervention as cosmetic rather than a fundamental fix, noting the limits of short-term ops against a massive federal debt load and broader confidence risks. Topic 4. White House Crypto Summit, AI and ABA accreditation. The White House hosted a crypto summit pushing the Clarity Act, which aims to define digital assets, network tokens, and digital commodities, and clarify SEC and CFTC jurisdictions with bipartisan momentum and hopes for passage by September. Industry groups say the bill would bring regulatory predictability and investor protections, while delays could prompt agency rulemaking. The administration is also advancing AI and data center policies, expediting permitting, encouraging diverse power supplies, and courting major private investments such as the cited Stargate project, while facing local concerns about power, water, and environmental impacts. Separately, the Education Department submitted a roughly 500-page finding challenging the American Bar Association's compliance with federal recognition rules, a move that could weaken the ABA's accreditation role and affect federal student aid eligibility for some JD programs. The ABA plans to contest the findings. Overall, the